Hello everybody, hope they are good. First of all, I hope that you had a nice weekend, that you could rest well, and that you charge your batteries because this week, you can already start to see that it's going to be quite a volatile week. And we have on Wednesday the FOMC meeting, interest rate decision. And even though the market is clearly expecting that the Fed is going to pause rates here, it's something that we've mentioning in this channel and on Twitter for quite some time. And that's something that it's very priced in. 98% of the market believes so. So if the result is that basically the Fed pauses rates, then the market is not going to move, okay? That's not where the volatility is going to come from. But we have the press conference, guys. And the press conferences of Jerome Powell, lately they've been quite boring. He's been avoiding some questions. But remember that some months ago, he was quite brave and he was dropping some clues and the market was strongly reacting from those answers. So let's see what he does on Wednesday. Let's see if he drops some clues. Okay, that's why it's interesting to me. Now, if he drops some clues, I think that he's going to be quite hawkish. And I'm going to explain to you why now in a minute. I don't expect him to say that he's done with the hike cycle. Okay, I think he's going to say, basically as the previous press conferences, that they remain data dependent, that we'll see what the data comes out like, but yeah, it's possible that there are new hikes. Okay, basically I think he's going to repeat what he's been saying, which is quite hawkish to be honest. And in my opinion, the reason is this, the oil chart. Okay, look at this, look at the gasoline prices. We've been talking about this for quite some time. First of all, in August, CPI came even higher than expected, but to be honest, it wasn't because the gasoline prices, because they only went up less than 2%. You can see here. But now the problem is that in September, look what is going on. It broke out from this pretty much, I would say, 9 months resistance. Okay, almost 1 year resistance. And it's going up exactly. Hang on, let me mark it from there. It's going up exactly at 9% up. That is crazy. So CPI next month is going to be fun. We should see a new spike in CPI. Of course, the Fed knows this. I think he's going to talk about inflation quite hawkish. So I'm not expecting fireworks yet. Okay. Now, if you notice in my chart, I was expecting, to be honest, a retest of this previous resistance before going to $93 a barrel. That was our next target because we have here that level there. But you can see how it didn't even retrace. It keeps going up. That's a cause of concern for the Fed. And I think that I want to mention this. Okay. Now, if we go back to Bitcoin, and that is where we want to make some business, right, guys? So in terms of swing trading, I guess that most of you read my Bitcoin Soon the update that I posted yesterday on Twitter. This is something that I've been doing for the past year and a half. So I think since March, and I've been doing every Sunday without missing any single one. Okay. So with these updates, I try to prepare ourselves ahead for the next week. And I was mentioning the idea that Bitcoin was going to visit 27K, and that is the key zone in the chart for me. Why? Because in that zone, that's the mid-range. You can see here, range highs, range lows. So that's your mid-range, quite a key level in the chart. You can see here how it acts, pretty much as a support resistance level. So that is where my focus is in the chart, at that mid-range. Also, you have the confluence of the daily 50MA, this purple line over there. You can see how it acted here as resistance. Here it was acting as resistance too, then support, but it fails. All right, you can see that, all the way here was resistance, so price dumped lower. So you can see how it's a key level in the chart, and I know that you can use different EMAs, but the 50MA, it shows that it's quite a reliable EMA, and price tends to react from that level. So my two scenarios was, okay, first of all, from here, spike up, and I was telling you yesterday, I'm not opening any limit orders, any short limit orders at the mid-range, okay? Wait for price to move. And you can see now why I said that. Okay, because if you open any limit orders here in shorts, you're already stopped from your trade. Okay, so if you are a full-time trader and you are going to have time in the screens, then it's better to watch for the reaction at that level. Okay, now let's go back to the daily time frame. First of all, long scenario idea. I wanted to see a spike up, where I just got that, and then a retest of the mid-range and daily 50 MA as support. If we hold that level, that's what I will be opening longs to the range highs, 28,300. But also notice how right above the range highs, so around this level, 28,500, we have so many short liquidations in the 1 month time frame in high block capital. Okay, so if I'm given the opportunity that price retraces and holds this level, the mid-range, okay, and it gives me the opportunity to open longs, then I'm gonna close some at this yellow line, and then also some of the position here right above the range highs at those liquidations, okay, because price tends to go to hit those retail liquidations positions. All right, so that's the long idea. And then of course, if you can get it back above the range highs, you have the chance to go and retrace this liquidity pool all the way there. Okay, because yes, I mean, this is a liquidity pool that is gonna get retraced sooner or later. The thing is that sometimes they can take months to get retraced, but once you're above the mid-range, that is going to be naturally your next target. Okay, 31,500. Right, so but yeah, if we play the range, that's what I'm watching. Okay, I would like to see a retrace, test this level of support, and that is when you can open a long towards the range highs. That's the long setup. Now in regards to the short scenario, then this should probably then get triggered on Wednesday if Jerome Powell is really hawkish. And in that premise, you could say that this move is a false move, Monday's false move. Okay, so for that, what you would like to see is that this confirms as a deviation above the mid-range. So on Wednesday, then you would like to see a drop again below this level, below the mid-range and below the daily 50 MA, test their resistance, and that is when you can open shorts towards the range lows. Okay, that is how I'm playing this in terms of swing trading. So far regarding swing trades, I'm flat. I'm not in any positions. I'm waiting to see what happens. Okay, do we get the retest here as support? I open long. Do we wait until Wednesday and price gets below this level, test the resistance, then I'm opening shorts? And that is how a trader has to trade. Okay, it has to react to price. It's a game of probabilities. So if you set up short limit orders just because what happened here was a test of the daily 50 MA and then a drop, then let me tell you something. Its trading setup is unique. Its moment is unique regards trading. So you can open a short here at the daily 50 MA just because here it got tested a resistance and then it dropped. Okay, because this moment here is unique. All right, because here, for example, you have the momentum here, then the retrace, continuation is different than just and for example, what happened here was the news of the ETF and grayscale. Okay, and that is why price spiked up towards this level. Okay, and then got rejected. So remember that, please. Each moment in trading is unique. You don't have the same setup twice, and it's a game of probabilities. Okay, so that being said, how can we trade today's New York session? Well, this is for the day trader. So the first thing is that there is no way I'm long in this. Okay, there is no way I'm long in this. It's extremely overextended. Look how many red candles. Okay, also these green candles, they are huge. So the chart is clearly overextended. And in terms of day trading or scalps, when this happens, you should not chase the momentum. You should not chase all these candles. Okay, it's more profitable to wait for a high probability trade that could indicate a reversal in lower time frames. So for that, what I would like to see is first of all, New York opens in 1 hour, but so far what I've been seeing is that Asia has pumped, London has pumped. So let's see what New York does. Okay, you cannot say that based on the trading sessions that you guys know what it is that one trading session manipulates price up or down, so it pumps or dumps, the other one holds, and that didn't happen. So then New York can reverse. Okay, that can't happen today because nobody has held. All right, both Asia and London pumped price, so you cannot determine that New York is going to dump. So that's why you have to be careful here. What I'm going to do is go into the 15 minutes time frame, see how overextended it is. Look at the 15 minutes 50 MA. It's at 26,900, so far away from the current price. And if you check previously, you can see that price tends to test it all the time. Look, this is quite similar to it might have happened here. Okay, it's very similar, but then price goes back to the 50 MA all the time. You can see it also here, okay, or here. You see that all the time, guys. All right, so that could be what we would see today. Now, a high probability trade, in my opinion, to go short would be to see some spikes up in the New York session, but price not progressing any further up. That is where maybe you could even see a stop hunt, gets back inside this level, and that's when you can open a short again towards the daily 50 MA or the mid-range, okay? So that is, for example, a scenario that you could be playing, okay? And again, it's not financial advice. I'm just telling you my plans for today. If I want to enter short, I don't enter short in the first red candle, because if you enter a short here, look what happened, okay? You are stopped or you are underwater, any of them. Instead, wait for a high probability setup to develop. Wait, for example, to see some spikes here, okay? Well, first of all, wait for the New York session to start and then decide. But this is scenario here, some spikes here, some wicks to the upside, but price not progressing any further. That could give you an indication that price has lost momentum. Momentum is over, and then it's ready to roll over. All right. So that is what I'm thinking. But yes, do I expect that New York retraces today? I mean, naturally, look at this chart. I mean, it's asking for a retrace. Okay, it's as simple as that. You just have to be careful with what your entry is. That's all. But that's what I'm expecting. There is no way I'm long in this. Am I long if we go to the mid-range? Because you want to notice how the daily 50 MA is also there. So you have their confluence, what could be a potential support. So if we drop here and we consolidate above support, that is telling you, okay, that's a push up, retrace, continuation to the upside. Okay, and you go to the range highs. So that is what you want to long here, okay? That's the zone where you want to long. This is not a zone where you go into long. It's simple. It's as simple as that, guys. That's how I'm saying, okay? Now, let's go to high block capital. I hope that was clear, guys. No much to say more. You can see also how these two liquidity pools here got retrace. Perfect. This week also getting retrace there. You see? So, price could at any time drop again towards the mid-range. So, try not to FOMO, because that's never a good idea, okay? But also don't try to catch knives, or in this case, don't try to catch tops, because you can get underwater for several days, and then you have to keep adding margin to your position to not get liquidated. That's a mess, guys. That's not how you want to trade. It's as simple as just try to pick high probability trades in order to become more profitable. It's as simple as that. It's all about efficiency. If you only chose high probability trades, you would be making more money or losing less money. It's as simple as that, guys, okay? So that is what you have to think. Think in terms of probabilities. So only focus on high probability trades and be neutral. Just because price is going up, you don't need to chase green candles, or you don't need to try to catch stops. Wait for that setup to develop. Okay? It's as simple as that. For example, what I've been telling you, 15 minutes time frame. If you see wicks here to the upside, but price not progressing any further during the New York session, that is telling you that this momentum here, it's finishing. Price drops, and here you have a Bart Simpson pattern. Okay? That's Bart. Say hello. Anyway, guys, let's go now to high block capital, and let's see where the liquidity is really, okay? What in high block capital? Let's see the delta first. Massive spike there, because over the weekend with this boring price action, then traders tend to close their position. So at the end, the delta goes to zero. You can see there on the weekend, and now it just spiked from 0 to $6 billion worth of long liquidations. All right, you can see here also that you got pretty much, it's not a big ratio, it's kind of like per every short you have 2 longs open. So it's not a clear short based only this. It's not telling us much, to be honest, the liquidation level. So let's go to the liquidation heat maps to see if we can extract some more information. 7 days time frame. What I see here is that we hit these liquidations at 27,000. We also have some here at 27,500, you can see, but of course you have some to the downside, okay? But you have to think that just because this heat map is telling you that 25,700 is yellow, it doesn't mean that price is gonna go there straight away. Look at the chart, okay? You're right now above the mid-range or above the daily 50 MA. So if you are shorting above support right now, it's not a good idea. At least wait for that mid-range to get lost. Once you lose that mid-range and the daily 50 MA again, then you can short towards this direction. But for now, just because it's yellow, don't aim for this zone in the chart. It doesn't make any sense. 1 month time frame. Let's see what is going on here. Okay, let's go this zone. These liquidations get hit. These liquidations are slowly building up still, but you go here at 28,500. This is what I was mentioning earlier. A lot of liquidations, also at 20,300. This is basically the range high. So again, if price continue pushing higher, that is going to be the next target, naturally. Okay, and in the 3 months time frame, if you go and check this, you can see how the liquidity here, it's huge. Okay, again, take these numbers with a pinch of salt because I've said this before. High block capital doesn't reduce the liquidations because they don't know when the traders are closing positions. So what they only do is to either increase the positions or keep them the same. That's why you see this either getting brighter or staying the same. You don't see that getting less bright. Okay, but anyway, you can see that there is quite a lot of liquidity below the range lows. Now, this 3 months time frame, we could even take still some months to get here to this zone if we do, okay? And that means that as we are right now in a range, price can range here like this, boom, 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 playing ping pong or tennis. And the liquidations here are going to increase, but they can wait. Okay, so there is no a rush to wait for these prices to get hit. That's what I was telling you. When we hit the range lows, that's what the short that we called from the range highs of the previous range at 31,400. We open a short there. Remember, guys, because this pump here was a deviation, then you get back inside this range, tested a resistance, consolidating on the resistance, that is key. We open shorts there, and I was mentioning this idea for a week or so. That's where I opened. That is where I opened the short, but I know that some of you also did. And then when we hit these range lows of a previous range, that's when we close the position at 25k. All right, so there is no rush for this zone to get hit because this is high time frame. So don't make the mistake that because this zone is yellow, you have there a yellow bar, price is going to get there, because that is not how you read this chart. Okay, you also have to use the trading view chart and a bit of logic to understand that price can take several months until we get there. All right, so that is pretty much what I see. Watch the mid-range. That is where you can do business, either to go long if we get the retest of support, or to go short if on Wednesday we lose that level. And I say Wednesday because we need a catalyst to see a big retrace, in my opinion. And that could be on Wednesday if your own power is hawkish. Okay, so if on Wednesday we lose the mid-range and the daily 50 MA again, that is when you can go short and you can aim again for the range lows at 25,300, I think it is. So anything else, you have to focus on day trading. Okay, you have to know what type of trader you are, and you have to know what time frame to use for your trade. So that is my swing trades idea. They are based on the reaction of the price in the mid-range. And then for short term or day trading, that's, for example, what I'm saying, what I've been telling you right now. Wait to see, for example, some weeks to the upside in the New York session, but price not progressing any further, that is where I'll be opening a short, again, to the 15 minutes time frame, 50 EMA, for example, or you can also aim for the mid-range, okay? So those are the types of plays that you have to differentiate, okay? Swing trades versus day trades. I hope that was clear, guys. Play safe, because we've started this week with a lot of action, and I have a feeling that it's only the beginning. So thank you so much for watching, guys, and I'll see you soon.